G'day guys, welcome back to the Devon Too Good Investing channel. Today in this video we're going to have a look at Corsair Gaming stock. We're going to have a look to see if this stock is worth buying and if it's attractive at current valuation. Within this stock analysis video we're going to have a look into Corsair Gaming's businesses, including their core business. We're going to have a look at Elgato, we're going to have a look at Scuff, and we're going to have a look at Gamer Sensei, and we're going to really try to understand how this business makes their money. Then we're going to look further into the financials, and then following that we'll have a look at the management team, and then make sure you stick around to the end of the video because we're going to be having a look at Corsair Gaming's valuation using a discounted cash flow model. So Corsair's business falls into two main categories. That first category is gamer and creator peripherals, and that second category is gaming components and systems. Now, as you can see, they compete against businesses such as Logitech and Razer, among others in different categories, but these are the two main categories that Corsair compete in. As we can see on this slide, the gaming components and systems makes up a much larger portion of the revenue compared to gamer and creator peripherals. However, we can see that gamer and creator peripherals is actually growing a lot faster, where it grew 55%. Well, the overall revenue grew 55% year over year. However, the gamer and creator peripherals grew 83%, while the gaming components and systems is growing at 45% year over year. So we can expect in the future, if this trend continues, that gamer and creator peripherals will start to make up a larger piece of the overall pie. And if we have a look here at gross margins, we'll also notice that the gamer and creator peripherals sell at higher gross margins than the gaming components and systems. And the fact that the gamer and creator peripherals is also growing revenue a lot faster, this will probably lead to future margin expansion, and this company will likely become more profitable on a gross margin basis going out into the future as that gamer and creator peripherals segment of the business continues to grow. Now, one of the reasons why that gaming peripheral and streaming gear segment of their business is growing really fast is mainly due to this Elgato brand that Corsair recently acquired. Now, they sell products such as the face cam, as you can see on screen right now, boom arms for their wave microphone, ring lights, I think that's a capture card right there. But these products sell at higher margins than their gaming components products. And this is going to make the company more profitable, and also it's growing faster at the moment, which is really positive. We also have Scuff brands, and Scuff make custom gaming controllers mainly for consoles such as the Xbox and PlayStation. And we can see also that they also create gaming headsets. Then also Corsair own Gamer Sensei, and what Gamer Sensei is a esports coaching platform. So pretty much if you're a hardcore gamer and you want to get better at a game, you can go ahead and head over to Gamer Sensei, book a one-on-one coaching session or a team session, and get trained to play games pretty much. In terms of this business is very high margin, but at the moment it doesn't contribute too much to Corsair's overall revenue. But this could be a good play if you believe that esports is going to grow and this product will be successful. So as we mentioned before, Corsair's main competitors are Logitech and Razer. And you might be asking yourself, what differentiates Corsair from their competition? And the real answer to this is that you've got to believe that Corsair's products are of higher quality and appeal to the hardcore gamers. Because as we can see by this slide up here, our competitive gamers and our committed gamers they spend the most money on gaming accessories such as Corsair's products. So pretty much you got your mobile gamers and your casual gamers, they don't spend much money, but as they graduate and sort of become more serious and aspire to become better at gaming and want to influence more people, you can see that they're going to spend more money, and Corsair is positioning their products so they appeal to the people who spend the most money within the gaming community. And fortunately for Corsair, the gaming industry has exploded over the last multiple decades, and you can see there's pretty much a third of the world are gamers, 2.6 billion people, and this is a $149 billion market globally. And that's mainly just talking about esports and competitive gaming. And if we see how people spend their time, we're finding more and more people are spending their time gaming. 11% of the leisure time in the US is spent on gaming. In terms of streaming, there's 12 billion streaming hours watched in 2019, and 71% of millennial gamers in the US watch gaming video content on streaming platforms. And as we looked at before, look at that revenue from esports for the world global market, and that's what Corsair is also trying to link up with, and they're trying to link up with some of these like influencers as well, because if they start using Corsair's products, that's really gonna be like free marketing, well, pretty much free marketing. And then we also have Corsair's 2 software platforms, and these platforms will encourage brand loyalty, and it will make Corsair products and Elgato products more sticky to the user, because they're going to be locked into the ecosystem of Corsair software. This might also open up opportunities for recurring revenue software subscriptions in the future, but even if they don't ever make money from it, it's going to improve Corsair's brand loyalty and stickiness within the ecosystem. Now, in terms of Corsair's financials from Q2 2021, we can see their net revenue grew 24.3% year over year, and this quarter is lapping the first real sort of pandemic quarter, which is quite incredible, because what it's showing to us is that all these people who are stuck inside and they're like, oh nah, people aren't going to buy Corsair products anymore, you know, people are going to go outside again. But one thing you got to know about hardcore gamers is that they're going to game, and streamers are going to stream, whether it's sunny outside, whether it's raining outside, whether it's in the day, whether it's at night. No matter what's happening, like, gamers are going to game, streamers are going to stream. It is what it is. And this reflects in the numbers. Now, if we move down to their adjusted EBITDA, you can see that it only grew 4% year over year. And that's probably pretty underwhelming. And, you know, at first glance, it looks pretty worrying. But actually, the reason for this was due to higher than usual expected logistic costs. And what they mean by that is, I tuned into the conference call, and the CEO, Andy Paul, he was mentioning that their freight costs were 4 times as high as what they were in 2019. And that's due to a lot of the ports in Asia having a lot of backlog. You know, the demand for freights is just insane right now, and the supply is being cut off. That's driving the price higher. So what we're seeing is a short-term spike in freight costs, and this is likely to be transitory. So pretty much what we can expect maybe going forward into the next few years is that these freight costs should normalize, and this probably will provide Corsair with opportunity for pretty big EBITDA growth moving forward over the next few years. And if we look at gamer and creator peripherals specifically, this is mainly from the Elgato branded products. And you can see that revenue grew 40.9% year over year. This brand's killing it in a time where it was supposed to be compared to a really strong quarter, which Q2 2020 was a strong quarter, but the revenue isn't slowing down. And what's really nice as well is this gross profit margin has also remained consistent year over year despite the shipping constraints, which is telling me that, hey, this is probably going to increase moving forward. That means more bottom line income. And then if we look at the larger part of the business, the gaming components and systems, their gross margin did decrease, as for mentions that we explained before. It's still reasonably strong. It's not. It's okay. It's okay. But you can see their revenue, it grew. And as these short-term issues alleviate, I think we'll see gross margins increase and we'll see more of that flow down to the bottom line. One thing I really like about Corsair Gaming's management, in particular CEO Andy Paul, is that they've really tried to knuckle down and pay that debt. So over the quarter, they repaid additional 25 million of long-term debt, bringing their year-to-date total of repayments to 53 million. So we can see that they've got total debt remaining of 273.9 million, but they've also got $134.6 million on the balance sheet. So that brings us to a net debt of 139.4 million. Now, if we think about it, this net debt isn't too large, because if we look at the year 2021 guidance, we're going to see adjusted operating incomes, which is actually greater than the net debt. So we've got less than 1 year of operating incomes worth of money. You know, this debt isn't a problem whatsoever. We're sweet with this debt. So if we have a little bit of a dive into Andy Paul, the CEO of Corsair Gaming, he founded the company in 1994 and he's still with the company 25 years later. So this shows that this man really does care about Corsair Gaming. And to make matters even better, we can see that he holds 2.584 million shares. So if we plug this in, let's just say that Corsair Gaming's share price is about $26.50. And if we multiply that by 2.584 million, we can see that he's got $68 million of stock approximately. So you can see that he's got some skin in the game, and it's not just some, by making the stock perform well, he's going to perform well financially too. That's the point I'm trying to make. And you can see he has sold some shares recently. This was back in June. But as a total percentage of what he owns, he still owns a lot of the company. So now let's have a look at the valuation for Corsair stock. So I've entered in growth rates between 10 and 18%. I think the most likely outcome for growth rates over the next 5 years is between 10 and 14%, however. And I've put in their free cash flow from last year into here. And what I've done is I've grown it out by these growth rates over the next 5 years. Then I've applied a terminal multiple of 20. So that means I think that Corsair in 5 years will be trading at a PE ratio of roughly 20. And I've entered my required rate of return of 22%. That's our discount rate. This incorporates a bit of a margin of safety as well. And then I've added in our shares outstanding of 100.2 million. And this brings us for a buy price of $26.61, assuming 14% yearly growth for the next 5 years. And then if you look down here, we can see our next buy price is at $24.60 and then $22.72. So if this happens, you can expect a rough 22% yearly compounded return. And it looks like right now the Corsair Gaming's stock valuation is fairly attractive. We're trading at $25.95 right now. So if you think that Corsair Gaming can grow at roughly 14% a year over the next 5 years, you can expect about a 22% per year return. So if you like this video, guys, please hit that thumbs up, like and subscribe. comment if you got any questions, and thank you for watching. Have a good one.